Fitch's outlook for 2013 is relatively positive compared to 2012 for corporates in Latin America. 2012 was a challenging year. We had more downgrades than upgrades during the year. If you look back at our portfolio, you'll see that a number of downgrades occurred in three different industries within the region. You'll see that we downgraded a number of the companies in the home building sector, both in Brazil as well as in Mexico. You'll see that we downgraded some of the more capital-intensive companies. We downgraded a couple of the steel companies, a couple of the pulp companies, and we also downgraded a number of the regulated utilities in Brazil. In general, we believe that the credits will be slightly improving during 2013. We believe that there's going to be an improving macroeconomic backdrop in the region. For 2013, Fitch projects that GDP will grow in the region by about 3.7%. That's an improvement from 2.8% during 2012. Some of the factors that are leading to kind of an improved macroeconomic environment in the region are low levels of inflation, relatively low levels of unemployment, rising wages, as well as improving consumer confidence. Most of the growth is going to come from Brazil, to be honest. I mean, if you look at the Brazilian economy, for 2013, Fitch projects that it's going to grow by about 3.7%. That's a sharp improvement from about 1% growth during 2012. The government has enacted numerous stimulus measures, which are really driving this growth. From a broader portfolio perspective, that's important because about 30% of the corporates that we rate in Latin America at the level of B+ or lower are domiciled in Brazil. Some of the specific segments that really should benefit from an improved economy include the retail sector, the transportation sector, as well as the healthcare sector. I mean, those are some of the credits that should see an improvement. The government has also enacted a number of measures kind of to stem the tide of imports into the country. That should also benefit other sectors, such as the steel sector. We don't anticipate a lot of rating changes in Colombia. I mean, if you look at the Colombian corporates, you'll see that they have relatively strong capital structures. Leverage is relatively low compared to cash flow. For 2013, we think cash flow will be at about the same level as 2012, if not improving. If you're looking for an area which could kind of drive a potential improvement in credit quality, I think you could look at the steps that the government has taken to initiate peace talks with the FARC. If there'd be an early breakthrough in 2013 in these talks, I think it would help consumer confidence in the country, which could in turn stimulate demand. Our outlook for corporates in Chile is relatively stable. If you look at our international portfolio, you see that approximately 90% of the companies are rated in the investment grade area. In general, the Chilean economy outperformed during 2012. We continue to believe it will perform well during 2013. Like Colombian corporates, the Chilean corporates have strong capital structures. They have good access to credit, both in terms of bank credit as well as capital market credit. If we do have a concern, it's the fact that the cost structures of a lot of companies are rising due to rising labor costs as well as high energy costs. In addition, a lot of the exporters are struggling due to the strength of the Chilean peso as a currency, which has also increased their cost structures. Our outlook for Mexican corporates is stable. In general, we've seen a slow improvement in the macroeconomic backdrop in Mexico during the past couple of years. We also believe that 2013 is going to be a good year. If you're looking for positives, it's a fact that the manufacturing sector in Mexico continues to improve as many jobs move back to Mexico from China, particularly in the auto sector. Obviously, for us, corporate governance continues to be an area of concern, specifically as it relates to kind of the smaller family-owned companies. Obviously, Argentina continues to be an area of concern. During the second half of 2012, we downgraded a number of companies due to a broad deterioration in the economy. During 2012, we also saw the government increase its interference in the private sector as well as enact tighter controls on capital. 2012 continued to be a challenging year as it relates to high inflation levels As it regards to those factors, we don't really anticipate a major turnaround in any of those factors during 2013. If you're looking for some type of positive for Argentine corporates, you would probably look at those corporates that export from Argentina to Brazil. Many of those corporates will benefit from an improved macroeconomic environment in Brazil and stronger demand from Brazil during 2013. Well, obviously, we continue to monitor many issues as they relate to credit. I think if I had to highlight 3 specific areas that we really look at in a real strong way, I think it would be inflation in the region, the growth rate of the economy in China, as well as the corporate's access to capital markets. If you take a look at inflation, you'll see that the consumer in Latin America is more vulnerable to rising food and energy costs than what their peers are in other parts of the world. You'll see that many corporates in Chile and Peru, as well as in Brazil, are exposed to the growth rate of the economy in China. That's a concern. For 2013 and 14, Fitch anticipates an average growth rate of about 7.8% in China. If the growth would fall below that level significantly, obviously we could have some concern about credits. Finally, regarding capital market access, many of the companies have enjoyed broad capital market access during 2012. We anticipate that they will continue to have broad access to the markets during 2013. Any concerns that arise as it relates to an issue such as the Eurozone, which kind of hinders their ability to access capital markets, would be a concern, which could lead to additional rating actions.